Hello everyone. Welcome back to 10K SOXL. Today, we move from idea to execution and walk through a reproducible, automatable Quant workflow built around the sentiment price dislocation between QQQ and the VIX, with one entry signal, 5-minute RSI, 14. Our roadmap. Strategy designed to no-code build and data and backtesting to parameter robustness to automated execution. This episode is for learning and discussion only and is not investment advice. Why this approach? Quant trading turns clear rules into a computer-executable playbook, helping operations run consistently across time zones while reducing emotional noise and anchoring decisions in verifiable stats. The aim is simple: executable, reproducible, sustainable. When a strategy is robust, it can use capital efficiently and let compounding work over time. If not, compounding amplifies risk rather than edge. Backtest at a glance. From 2010 March 1st to 2025 August 29th, about 15.5 years. A local long window backtest shows equity growth above 25 times with max drawdown under 30%. Compared with buy and hold QQQ over the same span, returns improved notably without raising risk exposure in lockstep. These 25 times, less than 30% figures are from local tests. The platform is used for near window checks and live parallel monitoring only. 3 pillars. VIX. Built from S&P 500 options, VIX is a constant 30-day, annualized implied volatility index often moving inversely to equities, though intraday, sentiment first, price later, dislocations are common. QQQ tracks the NASDAQ 100 with deep liquidity, suitable for fine-grained execution and risk controls. Alternatives include SPY, VOO, style match to VIX, QQQM, lower fee, typically less intraday activity, NTQQ, 3x leverage, higher path dependency and drawdown. RSI. The relative strength index maps momentum to 0 to 100. Common thresholds are 30/70ths with room to adapt by regime. On short cycles, 25/75ths or 35/65ths can help match volatility. Platform choice. This workflow uses Capitalize.ai to implement rules in natural language, backtest short windows, simulate, and automate execution with native trailing stop, take profit support. Because single backtests on platform are usually approximately 90 days, long spans are run locally. Platform runs serve for near window validation and live linkage. Timeframe. Entry uses 5-minute RSI, 14. 1-minute signals are more prone to microstructure noise and cost drag. 5-minute strikes a practical balance among timeliness, stability, and cost. If trying 1 minute, consider denoising and secondary confirmation, RSI smoothing, multi-timeframe alignment, ATR, volume filters, and stress test slippage and fees. Strategy rules. Entry, single lot, no averaging in. Go long QQQ when VIX 5-minute RSI, 14, greater than 60 and QQQ 5-minute RSI, 14, less than 35 are both satisfied within the same confirmation window. The same 5-minute bar or the adjacent one, aiming to capture sentiment heating up plus momentum cooling down, mean reversion. Exit, parallel, first trigger wins. Set both a 2% trailing stop and a trailing take profit that arms at plus 2.2% and exits on a 1.2% pullback. Fixed percentages or ATR adaptive values both work. The take profit only starts trailing after the minimum profit threshold is reached. Session and microstructure. Limit entries to 9:35 to 15:31 Eastern Time to avoid the open in the final minutes, which often carry higher uncertainty and impact costs. Auction dynamics at the open, close differ from continuous trading and can introduce deviations unrelated to the day's trend, inflating non-signal P and L noise for minute-level systems. Capitalize syntax example between 9:35 a.m. and 3:31 p.m. Eastern Time. Buy 100,000 United States dollars worth of QQQ if RSI, 14, 5 meters. Close, of VIX greater than 60 in RSI, 14, 5 meters. Close, of QQQ less than 35. Close position if trailing stop is 2% or a trailing take profit. 2.2%, 1.2%. Execution and cost sensitivity backtests, simulations differ from live in price sources and fill logic. Do not extrapolate ideal fills. Set multiple slippage tiers and commission schedules, and evaluate jointly with timeframe and session to narrow the paper-to-live gap. Minute level strategies are highly sensitive to costs, so stress tests are part of the process. Local backtesting, data. Data source. Barchart via web and the Excel add-in. Pull 5-minute histories for $VIX and QQQ. The add-in supports intraday data for indexes and ETFs. Prefer a web export plus Excel add-in combo. Quick discovery via web plus templated, refreshable pulls via Excel for reproducible pipelines. Excel add-in steps: install and sign in. After install, a Barchart tab appears in Excel. Use History. Insert historical tables, choose intraday 5-minute, set date range, and select fields. Symbols. Use $VIX for VIX and QQQ for QQQ per the add-in search. Symbols. Use $VIX for VIX and QQQ for QQQ per the add-in search. Toggle extended hours as needed to match the strategy's session. Export and cross-check. Save as CSV, XLSX for scripts. Optionally cross-validate with the web export to confirm timestamps and gaps. RSI pre-compute. Compute 5-minute RSI, 14, per Wilder, smoothed averages on close, for both VIX and QQQ to align conventions across platforms. Write a slim file with timestamp, RSI_VIX 5 meters, and RSI_QQQ 5 meters. In backtests, compare directly to thresholds to simplify logic and reduce errors. Workflow loop. Barchart 5-minute raw data to script-side RSI pre-compute to backtest reads signal columns and applies exits, slippage, and fees for a clean, reproducible pipeline. This separation makes it easier to reason about signals, costs, and execution. Cross-validation. Compare platform backtest, SIM results with the locally generated trade list to confirm signal timing and execution semantics. Short window intraday systems typically align well. Multi-day holdings may diverge as early trades influence later paths. This is expected. Robustness and tuning. Favor small robustness islands over single-point optimums. Use sparse grid scans over interpretable ranges and validate stability on unseen data with walk-forward or rolling out of sample tests. Always report gross and net results, then retest under multiple slippage and commission settings to ensure the edge survives realistic costs. Today's loop covered design, no-code implementation, data and backtesting, robustness, and automated execution under a sentiment price dislocation framework with 5-minute RSI, 14, and with costs and microstructure in view. If this was helpful, like and subscribe to 10K SOXL, and turn on the bell for updates. In the comments, vote on what to tackle next: 1-minute denoising and confirmations, ATR adaptive risk controls, or an automated local backtesting scaffold. All content is for learning and discussion only and does not constitute investment advice. Markets carry risk. Trade with care.